preparing live streaming. I'll let you go.
Ooh, magic happening.
That's right. That's right.
Also, I love the background. I think I said that last time. It's awesome though.
Well, I'm glad. I'm glad you have joined us. So cool. So let's kick it off. Thank you everyone for joining us today. We are here with a venture capitalist, Rohit Gupta, that he is at Plug and Play Ventures, and he's going to share a little bit of insight today about not only cybersecurity but impact investing and plug and play. So thank you for joining us.
Thank you for having me. It's great to
Great.
see you as always.
Yes. So it's great catching up again. And for those that weren't watching, we Rohit was nice enough to redo this interview because we because of COVID and everyone on Zoom. There were some mishaps and Zoom didn't record the last event. So thank you for blessing us with your presence again. So appreciate it.
Hey, no, it's much appreciated. Happy to chat whenever.
That's it. That's it. So cool. So I wanted to turn it over to you if you could share a little bit more about your background and how you
Mhm.
ended up as a venture capitalist at Plug and Play.
Yeah, definitely. So, as you mentioned, my current role, I'm working as an investor at Plug and Play Ventures, and we're actually a family office investing out of our CEO's basically $300 million kind of pool of family money. My role kind of currently, as you mentioned, I'm splitting my time between cybersecurity, which is more related to my background, and then sustainability, which is very much so kind of my passion. I think right before Plug and Play, actually, I worked as a product manager at ShieldX Networks, which is a cloud security startup focused on securing large enterprises that were moving their on-prem data centers to the cloud. So spent about 2 years there, and before that, graduated from Berkeley, where I had more of a business-focused kind of degree and a lot of different internships, including working at a startup, doing consulting at Deloitte, and then investment banking at Credit Suisse. So that's just a little more kind of on the background. And of course, I grew up in the Bay Area. I've always been surrounded by business and tech. My dad's an entrepreneur and also a computer engineer by trade. So I think I got interested in venture just from a young age, hearing terms like fundraising or pitch decks and closing customers and all these things just at the dinner table definitely got me intrigued as well.
Yeah, and I could imagine growing up in the Bay, it's through osmosis. But can you
Whether
share a
you
little?
like it or not.
That's right. That's right.
Yeah.
It's there. It's there. It's the privilege and the curse of being there. So can you share a little bit about why um, how did cybersecurity end up being the first focus for you?
Mhm. Yeah, honestly, I didn't really intend in college to get into cybersecurity. I mean, of course, I knew about it, and at home, like it presented itself in a few ways. Where, for instance, our like Wi-Fi password was like 30 characters long, something really ridiculous. That's when I knew, okay, interesting. There's some security element here. But to be honest, that's like really the limit to what I knew about cyber just coming out of college. Happened to get connected to ShieldX. I applied on LinkedIn for a product management posting and then was able to network a little to get my foot in the door, given I didn't really have a technical background. So it was more kind of by accident that I fell into cyber. But I think as I started to learn more about it, I really fell in love for a few different reasons, but happy to chat about that later.
Yeah, absolutely. Well, yeah, I would say dive in. I know, especially with cyber doesn't seem on surface as the first place someone dives into, but for those watching and thinking about venture, making a step into a startup, right? Being a part of that startup, and then that startup and the industry it's in, kind of leading you to the next area you're in, and then I know you have a family also in the space as well, right? So.
Hmm. Yeah, definitely. So I'm sure part of that just sparked an interest from a young age. But I think what really gets me excited about cyber relative to some other very exciting industries, I think there's like three different reasons. I think first and foremost, cyber is pretty much an infrastructure layer. It's very horizontal and it touches almost every single different industry. So healthcare companies have somewhat unique, cyber challenges, which are very different than what banks experience, which is almost completely different from what kind of energy companies, relate to. Even though they are all under this umbrella kind of cyber term, it presents itself and has very different challenges for many different industries. So I think it's really exciting to be able to look at, challenges and then solutions that are pretty much like cross industry and cross vertical. I think the second aspect about cyber is, unlike any other industry, you know, startups in our space are developing solutions that are pretty much trying to address problems that other sentient people are causing. All right. There's really intelligent, hackers and threat actors on the other side of this, let's say digital fence, who are innovating kind of every single day to exploit different vulnerabilities, find new kind of holes in, enterprise perimeters. So it makes for a very, rapidly kind of innovating field, because startups are innovating, but also these threat actors are innovating as well. So the pace of change and innovation is just really rapid and high. And I think, third and finally, one reason to love cyber is, I think as COVID has shown, it's not going anywhere. It is something that weathers every single economic downturn, because fundamentally, as long as we're sharing data in any kind of form, cybersecurity will be very essential and really important. And so I think that makes it very interesting and unique to me, kind of for those reasons.
Absolutely. And how for people walking into the cybersecurity space and that know nothing about, how would you frame the different areas to consider for investment?
Yeah, definitely. Good question. Um, I think there's a few ways you can go about it. I think one way that I personally like is separating cyber into smaller buckets based on their kind of role in the technology stack that's kind of at play. So for instance, in a traditional, let's say, enterprise application, you typically have like a three-tier architecture where you have a web application that communicates to the kind of app tier, which then goes down to kind of a database tier. So with that understanding of, an application and that, let's say initial kind of stack, you can start to sort companies into ones that protect, websites or web facing kind of assets, those that are focused on protecting applications, which could be internal to a business, or some that are externally available to consumers. And then third and finally, you've got this kind of database level where, frankly speaking, a lot of the crown jewels for an organization kind of lie. I think that's one way to think about it. And then of course there's cyber for almost every kind of form of data or anything that transmits data. So for instance, IoT, definitely has its own kind of area of cyber. They communicate and transmit data over 4G and 5G. APIs, which are basically becoming the lingua franca of the internet, also have their own security challenges, and therefore there's a kind of unique ecosystem around APIs kind of as well. So I think thinking of cyber in terms of where the data, lives and is being transmitted, and then understanding what part of the stack is being attacked or protected, I think is a good way to think about cyber.
And and as you mentioned before, with COVID, more people going online, I know as soon as there was a transition, there were all these mishaps with people hacking Zoom calls and Zoom putting
Right.
a number of safety and security protocols in place. What areas were elevated at well, even now and during that transition?
Yeah, 100%. I think maybe four different main areas kind of saw a rise in business or like a greater need for their solution. I think first off, as you mentioned, is really cloud security. So everyone and their mother is using Zoom, is using Slack, is using Office 365, all these different cloud applications, which then means a much bigger attack surface and reason for threat actors to then go and exploit that. I think there was a lot of confusion around COVID, and anytime there's a pretty massive global event or anything where there's room for confusion, I think malware then becomes a very, I guess, important part of that conversation, because even with COVID, for instance, there were threat actors that developed sites that kind of spoofed the COVID, global tracker. And it was just a way for them to inject malware into your laptop or your mobile device. And then thirdly, there's obviously phishing attacks. Actually, a good friend of mine fell victim to a phishing scam where someone sent her an email. She clicked on a link. It took her to a page that looked exactly like her Wells Fargo login.
Wow.
Unfortunately, she didn't check the URL, and she put in her information, and some hackers stole thousands of dollars from her. So I think really those areas of cloud security, malware attacks, phishing are really kind of the main areas that have really become a lot more interesting in this post-COVID world, let's say.
Wow. Wow. Yeah, I remember speaking to another VC that he used to work on the other side. Companies hired him
Mm.
to hack their systems, identify weaknesses, and he told me that the world used to work in the companies used to say, okay, we're impenetrable, right? Like that's where we are, and where they're at now is being realistic and saying, hey, look, we have this system to so that people don't penetrate, and then we also have this system so when they do, when certain actors do, we know and we can mitigate that activity. So it's really
Hmm.
interesting how it's matured over the last couple of years, and especially like you said, there's more surface area to penetrate. And you could see especially now how it's an impact, right? Like that
Yep.
there's a to actually keep people's data safe is impactful. And I think we spoke about this previously. Recently read an article related to fake news in this time frame, related to what you're saying, and influencing opinion, and that being an area of investment. Not it's tangentially related. It's
Right.
to cyber. So it's an interesting time for more challenges and more opportunities.
100%.
Uh,
Yep.
for you, I wanted to switch gears. I know you focus also on the impact investing side. So
Hmm.
at Plug and Play. So can you share, what do you all invest in, and how you made that transition? Or I know you do both. So can you talk a
Yeah.
little bit about that?
Happy to. So I think for starting with Plug and Play, we define sustainability, I think, very broadly. Pretty much any startup that touches one of the 17, United Nations Sustainable Development Goals, we would consider, I guess, sustainability. Although the broader term is really impact. To us, sustainability can be anything from a startup that detects guns more effectively to one that can detect disinformation campaigns. We'd consider kind of sustainability. I think our initial focus, though, is very much so on kind of core resources related to water, related to kind of our environment, and mitigating global warming is really kind of the core, I guess, investment focus, as well as our kind of accelerator focus. I think very recent, focus for us, but we've made a handful of investments kind of in the new materials and then the kind of water spaces, which I definitely say would be sustainability. So I think a really promising company we invested in is called Ketos, and they're actually a water quality analytics startup using a mix of hardware as well as software to test for different water health parameters like the pH level, the turbidity, salinity, etc., exposing this information in real time in a kind of cloud-based dashboard for industrials, for large and small water municipalities, to be able to detect contaminants and prevent that from getting out and exposing to real people. I think they're a great company. They're raising their Series B actually currently. First year they did, I think, $1 million in revenue. The year after they did 8. I think they have about 20 million in bookings this year. Unfortunately, they haven't been able to recognize it because they can't send people out to go and install. But I think it's just an example of a company where there's a very strong impact component, but the business fundamentals and their growth potential is massive. And so for us, that's what we get really excited about, is these companies that I think traditional venture would find very attractive, but also make a deep impact that's tied to their core kind of product and business model. I think in terms of my transition, so personally, I feel like it's been some time coming. For the longest time, I've been really passionate about environmental conservation, animal welfare, which is why I've been vegetarian for about 5 years and then vegan this year. So really, as I started to get deeper into venture, I've been looking for ways to kind of merge that personal passion with my, let's say, professional skill sets. And so when we started the sustainability, investment focus and program, it just seemed like a perfect kind of natural fit. And then I just had to do a lot of networking internally and just reading to show that I really, knew a lot about this space and I could add value, which is kind of what, helped with that transition as well.
Great. And for founders looking in this space, how much do you all invest in, and what are you looking, what characteristics are you looking for in a startup beyond hitting one of the SDGs?
Yeah, 100%. So in terms of how we invest, we typically play at the seed stage. Sometimes we'll go to Series A. But in any case, our average check size is about $150,000 for first money in. We can follow on up to about 500K to $1 million thereafter. And we typically, with that check size, we're not leading rounds, but we really like to follow on alongside an institutional lead. And then sometimes a kind of syndicate of other investor groups is typically how we prefer to invest. And I think in terms of characteristics, something that's really important to us is to have a founder or founding team that has an authentic relationship to the problem, and very much so is mission driven. I think one example there is Ketos, where the CEO Meena grew up in a small village in India that didn't really have access to drinking water, and that has kind of spurred her lifelong goal and passion of improving access and kind of quality of water. I think that's something that we love to see, is people who are very much mission driven and just have a reason why they cannot fail and have to succeed. I think in addition to that, we're looking for obviously just like a very large market size, ideally, a TAM over kind of $1 billion. We're looking for at least a kind of 100x return on the investments we make at the seed stage, given the nature of our business and the economics there. So we're really looking for companies that can make it big and become, very massive. So looking for those massive market opportunities. And I'd say more at the seed stage, I found what's interesting, traction is definitely good. We don't really have a hard requirement in terms of a revenue cutoff. I think it's good to see at least, a few proof of concepts, unpaid or paid, just to show some initial product market fit and validation, not necessarily a requirement. But I think what is really important is to be able to articulate some source of long-term defensibility, whether that's in terms of taking a radically different approach from your competition, which is difficult to imitate. You found some technology innovation that you can, get patents on, or something that's very different and difficult to imitate, which may confer a long-term competitive advantage, I think are the kind of main factors, that get us excited.
Yep. And it sounds like it's the same strategy on the impact side as the other side, right?
Exactly. There's
Okay.
really no difference except in exactly that filter of, is impact part of your product and do you touch one of the SDGs? But exactly, I mean, we're fundamentally making impact investments the same way as we would, let's say traditional investments. We just don't think that means concessionary returns.
Yep, absolutely. So just to and for those watching that don't know the phrase, the concessionary returns, love the there's we say for impact there's three different areas. There's the philanthropic, you're probably not getting your money back. The concessionary, you're willing to concede returns for the investment, and then just straight on, it has to be a financially astute investment as well as an impact investment. So glad you all are following that. I think more and more, I look forward to more and more venture firms doing that. Also wanted to share, can you share a little bit more about what's unique about Plug and Play and how it works for those that aren't familiar?
Yeah, 100%. So in addition to being a family office, I think two other parts of our business are a bit unlike most other VCs. So I think the first one is we run this kind of global innovation platform where we basically work with over 300 Fortune 500 enterprises. These are folks like, PVH in retail, US Bank and fintech, Siemens in energy, Walmart, Amazon. Most recently, the kind of Alliance to End Plastic Waste, which is about a consortium of around 50 different large companies, BP, Shell, Exxon, et cetera, that are looking to remove plastic from their value chain. We're working with organizations and companies like these that essentially pay us to matchmake them with startups in our ecosystem, as well as our portfolio companies that can help address their innovation needs and their pain points. That's something, this matchmaking that we offer to startups completely free of charge. We don't take equity for that. There's no revenue share agreement whatsoever. So we'd love to, connect with and work with, entrepreneurs, whether it's in cyber, sustainability, et cetera, to help get them connected to these large enterprises. I think it's a great kind of platform for that. And then the second, additional aspect to what we do is we also run equity-free accelerator programs. So a bit unlike YC and Techstars, they're completely free. I think the main benefits of these programs are more proactive exposure to our different partners versus being in the ecosystem, access to our mentor network of other VCs and industry executives, the ability to work out of our office space in Sunnyvale, and then access to hundreds of events that we throw kind of every year. They're about 3 months long. They happen twice a year. So in addition to investing, we also run this global innovation platform, which is pretty much open to all startups, as well as that accelerator.
Yep. And I think especially from the starter perspective, if you are not, lucky enough to get into a Y Combinator, let's say, and have those roots at Stanford or Berkeley, where you went, so you can at least come in as a founder, join something like plug and play where you have that physical location and that network into Silicon Valley. So when I learned about that, and also as investors, they're watching you, right? It's the kind of the best
Exactly.
extended due diligence that you can get as an investor, and at the same time, the startups it benefits because you're gaining access to the ecosystem. So very a unique model, and it's great that you're plugged in to that.
No pun intended.
Yeah, right. No, appreciate for those that So a little insight for founders, plug and play. I put the link in the network, and but Rohit, yeah, thank you for sharing your insight on cybersecurity. Actually, one thing I wanted to ask about a lot of investments that have been taking place. There were two companies that just closed. You're talking to the order of magnitude of 50 to $80 million rounds in the cybersecurity space, and in a time where a lot of investments are at a standstill. What's happening in cybersecurity, and why is that? Why are larger investors like putting so much money to work in that space?
Definitely. I think it very much kind of tying to what we mentioned, before in terms of this kind of uptick and rise in malware, in phishing, in kind of cloud security attacks. The need for these kind of solutions almost has never been greater. Of course, it's very strong always, but this kind of period has created, a big kind of spike in demand for these kind of solutions. And I think the investors who are watching this market and these markets kind of realize that as well. And I think from their perspective, it seems like a great opportunity to perhaps get kind of a value, let's say investment, especially while the market is not doing so great overall, but the cybersecurity market is doing very well. Given that kind of dynamic, it might create an opportunity for investors to get a better deal, let's say, into some of these really exciting companies that I think have, phenomenal kind of growth trajectory. I think some of the ones in the news, based on other sources of information, they seem to have their revenue doubling like year over year. I think one of them even tripled.
Wow.
Just the growth there is phenomenal. I think cyber very much is, I'd say, like top quartile of SaaS metrics when it comes to growth and revenue, et cetera. So these make for very financially attractive kind of deals, especially at a time where there's been such a massive need for cyber. I think it makes a lot of sense that we're seeing a lot of these bigger rounds. But what's surprising to me is, I don't want to cast shade, but like maybe a startup or two, which I didn't quite think would make it or really become this big because of COVID. Now's their time to shine. And they're really getting a lot more exposure and attention than perhaps maybe I thought they would. So it's been interesting to see that dynamic as well.
Yep, we can. As investors, we're always guessing, right? But we're making an investment based off evidence and attributes. But again, it's still hypothesis. So no, thank you very much for sharing your insight about cybersecurity impact investing. I'm glad you broke into the space and merging your passions and professions, and also about this time in COVID. So thank you again, Rohit, for blessing us with your presence. And yeah, look forward to seeing more. For those that are watching, again, this is our Impact Investor series on Rebel One Live. Come join us every Tuesday and Thursday at 7 p.m. Eastern Time, 4 p.m. Pacific Time, or you can find us at rebel1.com/live. So thanks again, Rohit.
Awesome. Thank you, man. Take care and have a good one.